All right, Kevin, this is for Monday, March 25th. I'm going to just go right to the newsletters themselves with anything that I've got newsletter oriented. I'll just go to it. Now, well, I'm going to open both the live June and August live cattle, and I'm going to bring everything over here from now on. So there's June, and we're familiar with this. If you listen to the audio and so forth, this is kind of a repeat. We've got a settlement back below this formation. 122.85 is our downside pivot point. And so let me just go ahead and open August so you can see that we never settled above that formation that we actually tested last week, 120.50. And I'm telling subscribers that there's no, well, let's put it this way. If you haven't gone long yet, you might as well wait for the August contract to settle above 120.50 before doing so, because you've got this resistance now in June at 123.70, and in fact, if we settle today below 122.85, that's a downward pivot point into later week, and in fact, holding below 123.70, this 117.15 to 118.35 area is now, I think more like 2 to 3 weeks where the June contract can bottom out into expiration. Not until we settle back above 123.70. And we did so actually a couple of days ago, which is why we're now deferring to, damn it, here we go. That's the way, right here, the August contract. 120.50. So play the short side in the live cattle complex below 120.50 August, essentially. Play the short side below it, play the long side above it. And if we close above 120.50, then that 127 even mark is expected. If we're talking, long term, by the way, that 122.85 is a channel structure on the weekly chart, which is now reflective of June. And there's also a daily structure there too. Let me show you that, actually. I'll go into June live cattle. I'm just going to pull up a fresh chart. It's roughly in this vicinity. Very simple. Yeah, 122.87. So I rounded down to 85 to incorporate that long-term structure on the weekly chart at 122.85. So if we close below that, today, that maintains a heavy dynamic into later week for the June contract. And the August contract has merely tested resistance at 120.50. And so in the August contract, holding below 120.50 allows this channel base, not illustrated really, but it's in the 114.22 to 115.57 region, which is in reach over the next several weeks. All right, so we can talk about whether we want to participate in cattle again this week or not, and so forth and so on. I'm just going to close out of these charts, and we'll go on then to I could take a look at hogs. I'm not even going to waste my time because I don't think we have the appetite for that volatility. So, what's the point? If you want to bring this up in tomorrow's conversation, we can. That is to say, looking at lean hogs, certainly willing to do it. Feeder cattle, a similar situation, my guess, given the volatility of this market. We did double top at 155.35 on Friday, but I don't think that's a level that's going to hold. I've got an ascending speed line at 150.95, and 148.57 is now this long-term descending two-thirds speed line. So we have a range of support about 2 points wide, that maybe a little more than that can absorb selling through spring, and in fact above which the market remains quite bullish. 158.47 in reach this week. What is 158.47? It's nothing more than, I'm quite sure, just a descending trend line off some highs. I'm kind of giving up on that 155.35 former high right now, given the volatility. And I don't think this is going to give it to us. I'll go into the weekly chart here. I'm quite sure it's nothing more than this. Yeah. Ah, damn it. Trend line. Yeah, 158.47 was that line just across those tops. I think that's our weekly containment level for the coming week. But, this buy signal right here, long term, as I've been mentioning, 163.50 now expected. if we close above that 148.50, I'm sorry, 148.47 level I just showed you, that descending trend line off those tops, that 163.50 becomes a mere 2 to 3 week target. Uh, Double top potential there. There's lots of stuff in here. So there is double top potential here, say on a monthly, if not seasonal basis. But, overall, this is such a long-term line that I think it begs a long-term target. And 182 is what I'm pointing to. It's really not clearly indicated, obviously, until we get above 163.50. So there's feeder cattle. Let's move on to, I think that covers the meats. I'm going to jump into, we've got RBOB. This is, it's actually tested its resistance last week and backed off on Friday. And so we have this channel top that's been holding nicely. It backed off Friday and it recovered into the close, as you can see. 91.79 and then 93.20 is this channel structure here that we did not test last week. So this is our range of resistance that is narrowing daily because this 91.79 level is rising gradually. So if you have an appetite for short selling unleaded gas, I'm all game. This is the area. We've been testing it. We could look at out of the money puts, at the money puts if you like. I think we should expect at least the 74.87 structure over the next week or two. But, quite honestly, we could, because this is a long-term area, we could quite easily back off. I've got 144.27, which I'm quite sure is a 5/8 pullback now from this low to this high, back down to 44.87. It's consistent with some of these highs in here, this whole congestive area. So I like it as a possible, say, 2 to 3 month target. So if we're talking big picture, this is the area to talk about. This is the area we are in right now. Same with crude, crude oil. Come on, open. Crude, rallied to within 2% last week of this area. 1% is an essential test. So if we get into low 61 handle this week, we are essentially testing the 61.67 to 62.15 area, which, as I've been saying, can contain buying through spring. And once tested, the market then susceptible to bearish rotation over the following several months into the 46.47 handle, this ascending two-thirds speed line. Now, nearer term, we do have decent support this week at 55.71. It can absorb weekly selling pressures, and in fact, above which the next 2 to 3 weeks should yield this 61.67 to 62.15 area. However, if we close below 55.71, then I have like a 51 handle target within, a week or so, and then ultimately 3 to 5 weeks could certainly yield this 46.11 long-term support area. So we can talk about how you might want to play that, but I'm all for finding a suitable, put entry. I don't know how you do this. The volatility is actually, I don't know what the volatility is, but I can't believe that it's all that incredibly high in crude oil. We've had some pretty methodical trade, nothing too volatile. As you can see, average daily range is pretty subdued. So buying at or out of the money puts once we enter this zone, I think is the way to go. And that's all I need to say about crude. We can take a quick look at May corn. We are approaching a meaningful resistance area that I have illustrated here at 385 and a quarter. And so I'm not at all opposed to buying at or just out of the money puts if we get into this zone. And we could actually get there on Monday. Do we want to buy puts if we get there on Monday? On Monday, a test of 385 and a quarter would be a volatility spike. But we could at least wait for a day or two for it to calm down and then pursue puts, because once we test this area, the market then can slip back into the lower 360s perhaps within several weeks. On the other hand, closing above 385 and a quarter does indicate this area here, 398 and a quarter to 98 and 3/4 within several weeks. That's our meaningful upside pivot point. I was hinting in my audio on Friday that if we settle above 385 and a quarter, and this is, I think we could set up, it gets complicated because if we close above 385 and a quarter, that in itself for the May chart by itself is a meaningful buy signal. Um, However, okay, Robin, there is a channel structure here. Yeah, I don't know. I guess what I was about to say is if we close above 385 and a quarter, we could go long under a longer term scenario, but what we'd really be biting our nails over would be waiting for it to settle the week above 398 and three quarter. So I think what we could do, if we closed above 385 and a quarter, we could buy it, and then we could decide whether to unload it in the upper 390s or wait for a settlement above the upper 390s for bullish continuation into the 440s then. So this is the potential here to settle above this two-thirds speed line at 385 and a quarter is a bullish dynamic through spring. Although, and I know I'm sort of mixing this up and muddying up this picture here. It's just that, well, that's all I'm going to say about it. I guess if I were to fall back on all the big picture stuff, and I might as well because the weekly charts rule, they always have, this is the essential pivot point into summer. So we could certainly, by settling above 385 and a quarter, top out in the upper 390s through spring. So there's that. Anyway, I guess play the short side up to 385 and a quarter at 385 and a quarter, and then play the long side with a settlement above 398 and three quarter on a weekly basis. That's the way to play corn right now, I guess, is if I were to sort of backpedal and summarize this. Let's talk about corn. I'm going to skip Dees corn. I'm going to go into bean meal. We're watching this. I have backed off a little bit on the low 320s resistance. I don't have it illustrated, but if you looked at Friday's letters, there is a long-term descending two-thirds speed line today at 320.3 that I was calling multi-week containment, kind of the start of a wide range of resistance up into the mid-320s. I backed off that because I want to give the market room to breathe here. If it wants to get up in the upper mid-320s, I don't want to confuse the issue and muddy this long-term resistance, which really is at 325.2 to 326.5. This area is in reach over the next several weeks above 311 even. And so it's worth playing. You know, we could look once again at or out of the money puts once we get into the mid 320s, which is also in the weekly continuation chart, completely different set of data. So there's some symmetry there between the two charts. And inversely, if we settle above 326.5, this is a good market to be long. You know, I almost want to say by that point in time, maybe just raw futures, the underlying. I don't know what volatility will be there then, but if we run up here in the next, say, week, the volatility is going to spike. Closing above 326.5, you know, those calls are going to look expensive. And so I would be certainly willing to play the long side, say, with a single futures contract because, you know, closing above 326.5, we're now looking at the low to mid 350s, which I don't have illustrated here, but it's this whole, all these little highs are in that area. And if you take a look at this high against this low, I think I've got 353.4. Yes, I do. Is a 50% Fibonacci retracement. You can also imagine it here. This high to this low. No, that's not right. It's actually on the weekly chart. 350.3. 354.3, sorry. Target would be a 3 to 5 week target, 2 to 3 month target, somewhere in there, with a settlement above 326.5. Until then, this market remains heavy through spring. And, you know, I'm just going to touch upon soybeans very briefly because I don't have an appetite for participating in them right now, and I'm assuming you don't either. I backed off all the 3-star areas. This is one big consolidation region, you know, and so these 2 to 3 week signals, you know, obviously we have an experience of that from last week. So I'm going with directional trade through the balance of the week below 899 and three quarter and above 910 half, which is the high settlement price from Thursday. And then, you know, I think this is a respectable support area if you have an appetite for buying it. You know, not only is it weekly containment, you know, I could beef this up to multi-week containment because once we test it, the market can rotate higher into May and even into contract expiration. There is that possibility. All right, but if we close below 879.5, then 857 even long-term support is expected within 1 to 2 weeks. But I'm not going to be pushing anything here right now because nothing is setting up. I've had two failed buy signals in this market in the last week and a half. And so, I think the emphasis is negative. Closing below 899 and 3/4 does signal this lower area, but right now it does not align with our underlying desire to participate in 4-star areas, which I think is really what we're looking at. And soybeans, wheat, this is worth talking about. I probably should have began here because we're still positioned. So we've got, well, this is probably best if I just pull up a chart and show you what I'm looking at here on wheat. And there's that daily chart. You're familiar with that. That's our long-term resistance area. Okay. Take these Fibonacci's off so we can see this. All right, here's our 457 even support on Monday. This is an area that can contain session weakness, and in fact, once we test it, under most circumstances, this could be considered multi-session. But I'm just, because of the higher volatility in this market, I mean, I know it's reduced in the last week or so, but we do have higher volatility than we've had in this market for a long time. So I'm keeping it session containment only. 457 even. If we close below it, then I'm looking for 446 and a quarter. And if you look at the chart itself, I've changed things up just a little bit. I'm not expecting 431 retest until we get below 446 and a quarter, which is this extreme channel bottom on Monday, and it rises to 48.5 on Tuesday and 50.5 on Wednesday, and blah blah blah. So we close below it, then a retest of that long-term structure is expected. Now you and I could decide that if we close today below 457 even, we just bail out of that extra call and take whatever we have left in it. Until then, I think it's worth staying in. And let me show you. This is that long-term trend line. This essentially held Friday's highs, 471 and 3/4. I've got a 471.5. On another chart, it's at 471.5. I'm not sure why, but I've got it at 471.5. And if we close above it, then that 485.5 long-term speed line is expected, which is illustrated at the top of page 1. So, what we have here, at least for today, 457 even support, 471.5 resistance. If we get above that trend line, then 485.5 is expected, which is where I would recommend just let's unload that call there. And then if the market gives us 505 even to 512 and 3/4 over the following 3 to 5 days, then we could play the short side there, looking at buying puts. But I don't have a problem. I could put a down pivot here, but I wanted to keep it simple. Up pivot into later week above 71.5, down pivot into later week below 46 and a quarter. But this is a respectable area. If we close below it, I have no problem, or if we violate it even intraday, I have no problem unloading that second call. We can talk about that in tomorrow's call. And that covers the newsletter items. Let's jump into the other stuff. These are all updated. Wait, this one is not. Bear with me. 1590 for the week. We came close to that. Well, not close. I'm going to update this right now. So this is our breakout area. This market backed off nicely. Euro currency. I'm not sure, what happened, but we had a rally underway. Once again, this long-term channel structure held the highs with some slippage. But this is our breakout to the upside, and this is the area to watch for if we're going to play this market at all in terms of short sale. We can keep an eye on this, though, but I don't think we're going to test it this week. I think it'd be backing off and actually closing negative on the week. This market's back into kind of a neutral framework. Canadian dollar, little follow through on Friday from having tested this channel resistance, which on Monday is at 75.47. And there is a 2 to 3 week target in play right now down to 73.73, which is dropping daily. So playing inside this channel, we've got a series of waves here, and that is expected. If we close above 75.47, which is possible, say later in the week. All right, what am I looking at here? All right, bear with me here. Active daily continuation. You're familiar with this, I'm sure. Ah, shit. Low. Low. High. Yeah. I'm going to go common W here, get the weekly chart up, and then I've got to reset it because there are just issues with CQG's. No continuation active. Boom. All right, now I have to redraw this sucker. All right. Yeah, that's where it all comes together right there. In the 76, upper 76, low 77 handle. So this area becomes our target if we close above this area on the daily chart. And that would be like a 2 to 3 week rally, I believe. Yeah. And that's significant. This is our resistance for the year, below which the market is obviously in this sort of lower low, lower high dynamic, and further emphasized by this channel structure. So we can talk about that if you like. I don't know about selling this rally here at this low of this high, but I could be talked into it. I think this is the area that we missed last week. No big deal. This is our upward pivot point into April, and holding below it, expecting 73.73 over the next several weeks. Japanese yen is actually strong right now. It's above this low of this spike high. This is the area to wait for, I think. It's a simple trend line. But you know, I could pull a daily on this, and I probably should in the next day or so, just to take a look at what the daily structure looks like to see if there's anything worth pursuing. But right now, this is just sort of, we're in this consolidation. I'm going to continue on. British pound still in there. This is our support for the week, 28.83. That's our base through April, above which this 38.43 level is in reach. I've been reading up a little bit on that Brexit. They have a deadline that they're probably going to expend for revoting. So, you know, that's kind of in the mix. Gold, good support here. I eliminated that speed line. It was just too much, too confusing. This is the bottom line. Holding above 303.6 to 304.3. June contract maintains a bullish dynamic through April and into May. This upper area in the 380s in reach over the next month or two. We now have a violation of this head and shoulders, and so the emphasis remains up. Where to buy it? Down here. Where to buy it above? Good question. I could see something like this, but by the time you get above this, yeah, I'm up for that. I mean, if you want to be aggressive, this is still a 3 to 5 week play. If we close above this channel structure at 1332.8, I'll just put it there. 1332.8. Closing above that channel structure, as you can see, would be bullish. I'll eliminate this channel so you can see 1303.6 4-star support. This is a 3-star resistance that can contain weekly buying pressures. 1332.8 settlement above accelerates. Silver, nothing to speak of here. New weekly support 15.024 can absorb monthly selling pressures. This is a 4-star support level, and above which this upper 16 is in reach over the next month or two. Copper backed off, actually settling back below this formation, 85.89 all week. I think this is worth another week to see if there's some follow through, and then we could look at playing the short side. But you know, I would just rather watch this right now. It's setting up as a classic failed longer-term buy signal, and honestly, I think I'm going to look around on the daily chart for this, find the active contract, and see if we see a daily. You know what? If you've got a moment here, I know we're 24 minutes into this, but I'm just going to pull up a daily chart. That's the May contract right now. And nice rally here. I can pull up a speed line here. Okay, there's where that 1/3 is. We violated that some time ago. And here's our 2/3, which we could easily test here this week. I'm just eyeballing this. There's nothing exact. But there's also nothing screaming to be bought, to be quite honest with you. I mean, to be sold. In fact, this is a support area for the week. This is our daily chart for the May contract. We do have a channel violation right here that mimics this area, 87.71. That's 85.89. So we're expecting this area where the market could actually get hung up quite easily, possibly through April. This is our downward pivot point on the May chart. And yeah, we have a channel structure here too. I really just take my time and look. Yeah. All right, so I'll keep an eye on this. This is actually a buy area on the daily chart, despite this failed buy signal on the weekly. All right. Mixed bag, probably not worth even looking at. Interesting 30-year bond did not violate its resistance. 1407 even this week. So what does that mean? That probably means that we pursue the long side, in my opinion, on the treasuries once the 30-year. In fact, I think we could just play the 30-year, if you want my opinion. I don't know why. I just have maybe it's a sentimental attachment. I've always liked the 30-year trade better than the 10-year. But the 10-year is leading the pack, leading the way. This is the inverted yield curve, right? So is that correct? Do I have that right? Inverted yield curve is higher rates. Well, that doesn't make sense, does it? Higher rates in the 10-year than in the 30-year. But that's actually not the classic definition of an inverted yield curve. I think it's two other instruments or another, whatever. So buy signal in the 10-year, not so quick in the 30. What does that mean? This is that classic, which chart should we follow? Which market should we trade? The bottom line is you should just trade. You should trade the chart that you have and not confuse the issue necessarily. But we can talk about this tomorrow, whether we wait for the 30-year buy signal, which basically tested resistance last week, or do we continue to look at pursuing, the 10-year? So we'll talk about that, okay? And finally, NASDAQ did test its resistance last week within a few ticks. So, and now did it close negative on the week? No, it didn't. So it can get right back up there here this week. This is a buy signal into the later second quarter. Until then, this market could continue down into this 64 handle over the next month or two. That's quite possible. Here's our support for the week. I don't know if we're interested in playing any of these levels here on the way down. I suspect not. But anyway, it's worth watching. That's 28 minutes, almost a half an hour here. Anyway, that's all I've got to say, and we'll be talking tomorrow morning, I'm sure.